So not much drama for the Nifty or the Indian equity markets in today's derivatives expiry. Hello traders, we are on the 30th of September 2021, 8:28 p.m. Indian Standard Time, and it was an 88 points negative close for the Nifty near month futures, closing it at 17,619, dropping as low as 17,580. So 17,600 was broken yet again, and 2 days back, the day on which we had a lot of range-wise movement and volatility, the low was 17,586, 17,580, today's low. So yes, lows are getting broken, and on a day-on-day basis, you can clearly see now the index has made a lower high, lower low. Short-term supports close to that 17,600, which is 550, 600, is still holding. We get a clear picture of this if we take a look at the 75-minute time frame. So we can clearly see it's turning out to be a multi-legged correction for the index. Erstwhile correction, since its rally was predominantly either a consolidation or a one-legged correction. Take a look at the entire move from here. From this low, if you notice, this was more like a consolidation. It was this over here. The next one was more like a one-legged correction. And after that, this one, of course, another consolidation. We got a breakout. Post which this was another one-way short-term correction. What is turning out this time is very, very clearly a multi-legged correction. So how far can it go if we see further weakness? Further weakness definitely will kick in once the 17,580 lows are broken. That is the recent lows, and in that case, from a short-term perspective, there can be multiple levels, but the serious important one is definitely this one. We've got a cluster, we've got a proven support, and I think if we go to the daily time frame back, we've got a nice cluster from volume profile as well. So 17,400 roundabout, 17,300, 400 roundabout is a pretty decent, strong support for the index. Will it come down all the way here? It's possible, but the chances and whether it will bounce back from any of the levels in between, that we will see over a period of time. But yes, as of now, one thing is clear: the index is in a definite multi-legged correction mode. We'll draw a line like this just to keep it and see how and when we get a breakout of such a simple trend line. Yesterday we spoke about Bank Nifty, and we spoke about the fact that the private sector banks have shown some weakness. That's not good news, and if the index corrects, then it's the Bank Nifty which can drag. Now today Bank Nifty is the largest loser, sectoral loser, over 1.2%, followed by media, metal. Private banks, of course, is the one which led. And so this underperformance from the Bank Nifty or the private banks is going to be the key role. It's going to be the important factor if the index continues on its multi-legged correction. I did some zone analysis over here on the Bank Nifty 75-minute time frame. This is where we are hovering right now. And this is a good level because it was its previous highs and now lows. So this is the level of 37,300, 37,500 kind of levels. Post which, this is also a pretty good zone because it's got some previous highs and lows. And of course, below that, we have some more strong support. So there's no dearth of strong supports coming in from the index if it slips further down. If the overall market slips down, Bank Nifty will definitely lead that move, highly possible. But there are pretty decent supports, which means that if you take a look at the market from a slightly larger perspective, we had a good run, a decent uptrend, Nifty, Bank Nifty both. And so the possibility of let's say a healthy correction, a healthy 5-8% kind of a correction, which will create some headroom, momentum headroom for the index, is very much likely. And for the overall markets, it's not a bad deal. If I take a look at YTD for the market, this is the way it has performed since Jan this year, and it's pretty impressive. So all throughout, we can see that the month of Feb all the way down till April was quite a corrective mode from the index. This is the Nifty chart. Before that was a one-legged correction. After that, a consolidation. So all this year means throughout this year, the corrections, let's quickly do this analysis. The correction, the first one for the year was around 7.2%. The next one, which was made up of multiple legs all throughout, led around 7.8%. So all short-term corrections leading to a larger fall of around 7 to 8%, and then we have a consolidation. What about now? I'm going to ignore the 18,088 mark. I'm just going to take it the 17,900, 950 kind of level. And if I come to this at the current juncture, then we've got a close to 2% correction. What if this 2% correction comes all the way down to this level? It's going to be a 3% correction. What if we get a 7 to 8% correction like we had received this year? Then we're coming down sub 17K, close to 16,500. So let's be realistic. We've seen 7 to 8% correction this year twice. So even if we get a 7 to 8% kind of correction, we should not whine and crib just because we've got used to a bull market and a trending market. I don't know whether this level will come or not, but a probabilistic 3 to 4% kind of a correction in the market is not bad. It's not bad. In fact, it's actually healthy for the overall uptrend. Let's see how it plays out. In today's trade, real estate was the largest gainer, just 1.5%. Then PSU banks. Banks did move. SBI also gave a nice move, but then it slipped from the highs. And that's why the PSU banks, you can see very clearly, has slipped. Pharmaceuticals did pretty good, but primarily this is Sun Pharma which led the move. We'll keep a close look at the IT stocks, because if the index manages a bounce back anytime soon, then I think IT will pick up, especially stocks like TCS and HCL Tech and Infosys. But one expiry behind us now, the month of October. The contract of October begins tomorrow. So wish you all the best for this new contract. Trade well, trade wise.